Dear traders, ladies and gentlemen, welcome to episode number 23 of our MCA Trading Made Simple series. Today we talk about what not to do, okay? This is a very important video and it applies to all kinds of financial trading. So those 6 points, I call them the 6 Forex Devils, okay? If you fall for any of them, you will lose money. Not using stops, okay? I mean, it's incredible how some people try to convince themselves that they can just place trades without putting in stops. One single trade, one single click can mess up your whole account. Now, of course, if you use very tight stops, you will get stopped out all the time and also lose money. If you use stops on a strategy where the strategy is not really profitable overall, of course, you will still lose money. However, that's the whole point. You need to find a strategy and approach which has upside potential, whereas each trade is secured with a stop. That also allows you to calculate the risk per trade and all of that. But don't fool yourself that you trade profitably by not using stops. You're playing with fire. It's the same like selling an uncovered option. Okay, the downside is unlimited. One single trade may wipe you. And there are very few exceptions in the trading world of traders where they can trade profitably without stops. Do not assume that you belong to them because they have very complex risk management approaches such as basket trading and much more. Okay, but for 95% of you watching this, you need to use stops in your trading. You will eventually get it wrong, okay? And then you don't want to lose the house. It's that simple. So incorporate stops in your trading. They have to be balanced. They can't be too far away. If you use like an emergency stop, the price is here and your stop is down here and your profit is here, you may hit the TP a few times, but if you have one loser, this loser wipes out all the profits you made in those little trades. Okay, it's common sense. Alright. Over leveraging. You can mess up everything with over leveraging. Do not do it, okay? Putting in too much in a trade, having concentrated risk, okay? Like depending on this or that market going up or down. This is really the recipe for disaster, okay? Do not over leverage. There's no need for it. In Forex trading, you get enough setups, enough opportunities. Okay, there's no point in placing massive risk on just a few trades. That's not professional, that's gambling. Do not do that, okay? Yes, there are times where you can be more aggressive, for sure. And a good trader, an experienced trader will also exploit that, but for most people watching this, over leveraging will actually constitute your downfall. Okay, it is bad risk management. And of course, this ties into unrealistic expectations. Okay, if your goal is to make 10% per week, okay, you are over leveraging. This is not realistic in professional Forex. Third point, no proven edge system hopping. This is a big one, okay? And ironically, the people who don't watch these videos, they are subject to that. They try a system, it works a bit, and then there's a drawdown, and they go to the next one. Because they say, wait, the price reversed here. It was easy to see that it reversed. Why do I not also add a reversal system? It's a very nasty, vicious cycle, yeah? You will just end up jumping from system to system. And the reason is that you actually either do not actually have an edge, or if you have an edge, you don't trust it. The whole point of our approach here with the MK Web is to use a proven edge, okay? That is taken care of. Now you can focus on the execution as a trader. This is the big point of the MK Web, alright? Over trading, no patience. It's also a very common downfall. Okay, people who are like sitting there trying to click buttons all the time. You can't do that. You will only make the broker rich, okay? Every time the broker earns the spreads and commissions and swaps, and the best traders, they are really selective in their trades. They don't try to place trades constantly in Forex, okay? Don't do that. You will just like empty your own pockets. You need to be able to wait for the right conditions, for the right setups. Patience is key in this game. Even if you trade a 5-minute chart, you need patience, okay? You need to wait for the right moments. Do not randomly click across the pairs, you will lose money. Revenge trading, PLA chasing, emotional trading, this is another big point, okay? People they lose, and then they try to make it all back in the same day by increasing the risk, and this is the beginning of a disaster because they will just lose more. Okay, they chase the P&L, they have a down day, they don't want to accept it, they have a down week, they don't want to accept it, they try with violence, by force, to get it into a profitable week, and that leads to disaster. Okay, it's emotional trading. Good traders, they are not emotionally affected by their current P&L. I know it's not easy, but with experience you will understand how important that is. Number 6, focusing on cheap entries, news gambling, averaging. Okay, especially in combination with the other points, this is deadly. Like the price comes down and you want to buy cheap even though the reversal setup is a more complicated one. Okay, and then it goes against you again, you try to buy again, trying to get a better price, and it goes down again, you try to buy again, and you end up with a disaster. Okay, sometimes it's better to not enter cheaply into the market. Okay, reversal trading is possible, but it's for more experienced traders. As a beginner, you shouldn't try to trade reversals. The same goes for like news gambling. Okay, there's big news coming out and you're placing a big position before. We don't do that kind of thing. Okay, it's way too risky. It can go 200 pips in one direction and blow you. Okay, so that's very important. There are some other aspects as well, like here martingale trading. Okay, so always increasing when it goes against you. Grid trading, like, you know, whenever the price breaks out in one direction, you trade in that direction. Pyramiding, like increasing the trades in one direction. Averaging down, like what I showed when it goes against you, again trading. Hedging, yeah, like just trying to hedge the problem away, but the problem is you need to eventually resolve the hedge, otherwise the swap will hit you as well. High frequency trading, yeah, trying to trade like trades on very low time frames all the time. This is just trading noise. Unbalanced stop trading, what I explained before, yeah, that the stop is either way too far away, it's just an emergency stop and an illusion, or it's way too close, so it's like stopping out all the time. Bad trade management, okay, not being able to actually let the trade run, that's another important aspect. Sometimes it's very important to let a winner run, okay, that's where your bonus, where your upside comes from. Do not always cut all trades as soon as you can. Then there's a whole other set of issues, of course, we have talked about it several times, yeah, like using repainting, lagging, whipsawing indicators, and again, unrealistic expectations to the game, yeah, thinking you can buy a Ferrari next month with your Forex trading, that won't happen. Okay, this is so important, like, to be honest, like, this is very essential. That's why I wanted to dedicate a full video on it, because we're talking so much about market analysis, how markets work, how you analyze correctly, how you use the edge, but this is as important, okay, to stay away from those Forex Devils, okay? This can mess it all up. You can perform brilliant analysis, okay? You can really do your homework, you can really predict well and get a good strike rate. But if your risk management is not on point, you will still lose. Okay, this is a very, very important aspect of the game. I can't emphasize that enough. If you read market wizards, they all have different strategies, but one thing they have in common is they all have a very precise risk management in place. Okay, that's what's needed. Be smarter than the masses who are just gambling around. Okay, this will be very expensive for you if you abuse the Forex markets for your own gambling. Trading is not gambling. Trading also depends on chance, but you have the risk under control. You know which risks you're taking. Any trade can be a loser at any time. That's why you need to be very aware what the potential downside is. Okay? Be precise. Find ways to make that work for you. Like some people, they like to really precisely calculate the lot size depending on where they place the stop. Other people, they want to simplify and say, look, I have 3 different risk management stages, like low risk, medium risk, high risk, and you know, this is respectively what I'm willing to risk per trade. But be aware of this aspect of the game. Even if you understand the causality, if you gamble around and over leverage, or if you don't use stops, or if you're just over trading everything, or you're revenge trading because you want to be profitable every single week, okay, or you're just like picking very, very advanced setups rather than focusing on the easy ones, you will still lose money. Okay, if you predict markets based on causality but then you martingale into the positions, you will still lose money. Eventually you will blow. Okay, the same applies. So please take this to your heart. Okay, this is essential in trading, and this is maybe a good way to showing it from the other side what you should not do. Okay, rather than always talking about what you should do. I hope you liked it. Lots of love. Take care.